Good morning, everyone, and welcome to the Sirius Report. Well, Paul, with all the hype over first the tariff wars and then the Ukraine conflict likely winding down, we really need to take a hard and honest look at the state of Western economies. And number one on that list is the UK, where their economic data is screaming to be the first domino to fall.
Yeah, absolutely. I think when I said this a few weeks ago, probably even longer than that, time flies, as we all know. Well, we said the UK will be the first domino in the West to fall. And there's so much data that supports that perspective. And in essence, this would kind of be a situation where we're looking at the global south and all these economies that are emerging, and they're called emerging markets. I think that's a bit of an insult to the likes of China. We're given China really, in essence, has the biggest economy in the world now, if we look at true metrics. But now we're looking at Britain being the first economy that is actually in terminal decline and is likely to fall away from being this in the so-called developed markets. And then it wouldn't even be in an emerging market. It in terms of its economy, you would say its economy just, I don't know what adjective you would use. Third world economy, basically. And I'm not exaggerating when I say that because we'll come on to the reasons why and we'll discuss at a pretty high level because if you get into this too much, then you would spend hours and hours discussing this. But enough to realize that how bad the UK economy is, its financial system is, and this comes back to the fact that Britain's been in decline for a very long time. They've had all these false dawns, and subsequently financialization came when there was this realization, correctly, that a lot of industry in the UK in the 70s was no longer profitable. The big mistake Thatcher made, the worst mistake Thatcher made, was to say, well, we won't find an alternative to this. We're just going to basically crash and burn all the coal mining, etc., steel making, whatever. We're not going to replace it with anything. We're going to have this thing called financialization in the 80s. And here we are today, where financialization in the West, including the UK, the US, everywhere else, is completely ran out of steam. It's fallen off the track in 2008, and they've done everything to try and keep that insanity going, hence all the asset bubbles, etc., which we've discussed previously. But the UK, it has so many problems, and there's no doubt the pandemic accelerated many of the problems, not least to do with the health service, where there is so many people waiting for procedures to be done. And it's going to take years. I actually know someone in the UK, a good friend of mine, who was obviously pretty active, does a lot of sport, injured their knee. They're being told it'd be probably 3 years before they can have a procedure done. So that gives you an example of the extent of the problems that exist with things like what you might term public services. So healthcare being an obvious problem. And the UK, of course, also suffers from enormous infrastructure problems because it's done nothing for decades. And it also kind of obviously suffers from the same problems huge amounts of Europe does, where now it doesn't have access to cheap energy anymore because it cut off its nose to spite its face. It's obviously deindustrialized. It has extremely low productivity. It's a very low tech economy. Its living standards are cratering. There's absolute clear as night follows day that it has terrible political instability. There's a lot of societal unrest, and there's a lot of clowns on X and other social media platforms fueling this. And people need to realize what their agenda is, but I'm not getting into that today because that's an entirely different subject. But when you have very, very poor public services as well, and you start to stack up that Britain is no longer regarded as a nation that anyone in the world trusts either. These all these problems really start to stack up. And we have all these fiscal crises, and we're going to talk a bit about what's going on in the bond markets. And really, our financial system and all the institutions just don't look fit for purpose anymore. I'm not sure they did for a very long time. And what does the UK have to offer the world? Absolutely nothing. And the UK, of course, also stupidly has turned its back on China, although there has been moves in recent times to try and do something to resurrect that relationship. But they can't help themselves but still having digs at China in ways that would be absolutely idiotic to do so, because the United Kingdom desperately needs huge investment. And I think later on I'm going to start talking about what can the UK do to turn this around. But at the moment, it's just firefighting crisis after crisis. There is nothing that can be done to fix things that have been so badly broken for so long. And I'll obviously give way to you, Ken.
Yeah, I'm going to go ahead and lay the foundation real quick of the different economic data points that allow you to expand here in a moment. Obviously, we're talking about the bond market, the gilt market. 30-year gilt yields highest since 1998, rising to 5.6% on Monday, yesterday. So then we move over to UK unemployment, 4-year high with fewer job opportunities in retail and hospitality, which is an interesting thing because it doesn't talk about there being any type of opportunities in industry. Then we move over to inflation. UK inflation rises to the highest since early 2024 at 3.8%. Doesn't look like it's going to stop anytime soon because of what ended up happening in the budget. Now, there was a budget battle that took place in April where they were trying to deal with austerity, some austerity, deal with pensions, deal with money that would potentially raise the minimum wage, and really that came it crashed and burned from the very beginning. And what this is left is the only options they seem to have are to massively bring about austerity in government spending or to raise taxes at a time when the economy is absolutely imploding at every level.
Yeah, and that's the problem. They talk as they always do when there's big, huge black holes in the budget. I think there was talk it could be, well, there was claims it was 60 billion. Someone said, no, no, it's 40 billion. But it was 25 billion. Previously, who knows what it is in reality, but it's huge and it's going to grow. And their obvious case, as they always do in the West, is we have to have austerity. And they make enormous cuts, which is the worst thing you can do to an economy. And if they raise taxes, they're just going to obliterate what's left of the economy in the process. But the issue is with bond yields, and it's worth mentioning the 10-year gilts at 4.75%. So there's a sovereign debt crisis in the making in the United Kingdom. And these levels are higher than when we had all that problems when Truss was very briefly the Prime Minister and it nearly blew the pension funds up and the Bank of England intervened. The question I will ask, and I'm asking the question and we're not going to talk about an answer to this, why is it not a problem now when the yields are even higher? Something for everyone perhaps to chew over and think, was there more to what was going on with that debt crisis issue then? Remains to be seen. Maybe history will give us some indication in the future what really went on. But the other problem is that why is no one wanting to buy gilts? That's the basic bottom line, because the yield on the 30 years been rising for 2 years or longer. That is a clear indication that in order to sell the debt, you're having to increase the yield, uh, and significantly. That shows there's no real demand, and therefore they've got to keep raising the yield in hoping to sell the debt. Again, I think it's always questionable is who's buying the debt anyway in the process, but very clearly the demand is not there, but the supply is enormous. So what's going to happen if this continues to rise? Well, the risk of a sovereign debt crisis is self-explanatory, and is government spending going to decrease? Well, like all these Western governments, the answer is no. I mean, and if they try to impose austerity when everything's collapsing, it's clearly an enormous problem that they don't want to face one way or the other. But in terms of inflation being 3.8%, it was expected to be 3.7. It was previously 3.6, but there has been employee tax increases going on. Minimum wage is also up. Business rates are higher. There's companies cratering because of reduced supply. These are all reasons why inflation's rising. And the Bank of England said, well, we're cutting rates, and it went from 5.25% to 4%. But now with inflation rising, there's going to be pressure on them to increase interest rates. And everyone's going, but why are they decreasing rates, the Bank of England? Why are rates on the 10-year, the 30-year on gilt yields rising? Well, again, because there's no confidence in the United Kingdom whatsoever, because the entire economy is collapsing. So, and the national debt keeps rising in the UK, obviously. Governments have to keep raising the amount of borrowing they're doing. And there's no way out of this. You can slash interest rates, but if inflation's rising, what's that going to do? It's just going to cause more and more inflation. But at some point, they're going to have no choice, because when everything falls over in totality, they'll be left there with what all Western countries will resort to, QE and zero interest rate policy, except then it'll be absolute desperation. And then they'll be printing money to plug gaps everywhere, because if they don't, and we have a total meltdown, well, that will include the banking system. The problem is if pension funds start cratering because of interest rates, and the wider financial system starts cratering, and then the banks are affected, if it becomes a systemic problem in the UK, it's going to immediately spread to the United States and Europe in the process, because of how the Western financial system and all the banks are lassoed together, and they were in 2008. So it's not going to be a problem that's contained within the UK. That's not possible. No one seems to be acknowledging why we have this disparity between the Bank of England rate and the yields on the gilts. And because to say that publicly, is very damaging, because you're basically saying to everyone the economy is dead and buried, and confidence in the United Kingdom as a market to buy debt is cratered. And so they just pretend they don't know what's happening. Well, that's why, as things stand, the United Kingdom is almost certainly not definitively going to be the first domino to fall. Now, that doesn't mean that something catastrophic could happen somewhere else in the West that actually might be the catalyst and be the first domino. We're just basing it on all the data that's available, because there's no doubt if you look at the yields on German bonds, etc., they're all rising. They're just not rising as sharply as they are in the UK. So the problem is manifesting itself in all Western countries. It's just not as acute a problem as the UK. Because basically, what has the UK got to offer the world? Nothing, or virtually nothing. I mean, and what the UK needs is enormous investment. But in what? what have we got that people would want to invest in? So if you want the Chinese to come here to the UK and say we want, Dan, what are they going to produce here? What would actually be of something that you could employ people because automation's making that less and less likely. But again, you're paying salaries way too high to be able to produce anything here that you could then sell to the world. And if you want to produce, you have manufacturing here and reindustrialize, you have the same problems as the US. Inflation well is going to be absolutely self-explanatory. Everything will cost more to produce, but equally, who are you going to sell your finished goods to globally if you want to try and increase your export base? Well, you're going to have low value manufacturing. But how are you going to do it? You don't pay people low enough to make that a reality. Who's going to want to invest here, given the UK is very keen on following the US in terms of sanctioning, etc., etc. And what resources does the UK have? Well, not that many. Okay, there's the issue of North Sea oil. That's becoming increasingly a bit of a thorny subject. Maybe that's something that can be explored, but that's something that will take a long time to come to fruition. I mean, so who, where's the technology that people can invest in here? Because again, we've suffered from the same problem as the UK, where we have, as the US, where it doesn't have all the STEM graduates the way it did, science, technology, engineering, maths. I mean, so, what's going to happen with regards to uh, rectifying all the problems with healthcare, with education in the country that needs enormous investment, there is no investment available. So the UK faces a very bleak future. And I always come back to the point, even if all the existing political uh, personnel or establishment was to leave, who's going to replace them? Where are all the people who have the capability to know what to do? There probably aren't that many of them, and the ones who do would not want to go near what I've termed on X the other day, the lunatic asylum that is Western politics.
It's kind of interesting when you take a look, there are four big pillars in the Western financial system. There's the US, there's the ECB, there's the City of London, and then there's Tokyo. Tokyo, the problem with Japan is they still have industry that they can be able to export and earn revenues from. So while they're having to deal with, for the first time after 40 years, rising yields and interest rates, they have something that they can fall back upon to at least lessen the blow and keep it from absolutely imploding, except for maybe there have been talk about some of the banks having problems, but their central bank has been dealing with it. The ECB, they have no problems going to negative interest rates and printing money to protect the Germany, France, and any of the others. So they are have dug themselves in a hole, but at least they're doing it at a much slower rate, as you mentioned, from the bond yields that are coming out of Europe. The United States, obviously, we had a pseudo scare. We had SVB, the Silicon Valley Bank, and we had a number of different mid-level banks. But the Fed is still the recognized reserve currency, and they can print money into oblivion to go ahead and paint and cut and fill these holes. But more and more, and it's something we're probably going to look into here in the future, more and more the economic data that is coming out of the United States is really getting bad and it's starting to accelerate. But that leaves Britain. And Britain has very little industry, and it has a financial system that has been, in many ways, previously propped up when they were part of the EU by the ECB, and now for much of it, also the United States. But the big thing is that when we talk about Britain, of the four pillars could potentially be the domino, let's go back to 2007 real quick. It was Northern Rock, which was really the canary in the coal mine that was signaling the collapse that was to come just a year later for the entire Western financial system. Britain is still important in this, and to see the signals that are coming out as they accelerate, especially we didn't even mention the demographic problems. Forget the immigrant problems, the demographic problems in most of these countries where they have too many retirees and not enough workers to fill the gap. All these things you can never predict exactly when, but when the signals start happening, you have to be pay attention and you have to start preparing in some capacity rather than wait for or hope for another government bailout.
Yeah, absolutely. And just, I think, a final point to make, talk about why the UK economy is such a mess is, well, a number of many, amongst many reasons, is the UK service sector accounts for about 80%, 80% of its economic output. Yeah, they talk about the UK's manufacturing and construction, but they're in serious decline. We talk about its agricultural sector. Well, I know that pretty well from my time. Okay, I don't live in the UK anymore, but I know enough, and that it's not actually as big a proportion of the economy as it once was many years ago, and that is shrinking. And we always sit there and look at this, but when you have a service sector that big, and the service sector's in big trouble because that relates to retail and hospitality. Well, if people are, suffering, they're not going to spend money. Therefore, that's going to impact that part of the economy. And we include public services in the service sector, which is ridiculous because they're just a massive drain. I'm not saying health isn't important and education, of course it is. But, a lot of this is very woolly data that actually doesn't mean anything. And how much actual real manufacturing do we have in the UK? And that's now in decline, as is construction, as is agriculture. And they could come out with all these other things talking about, uh, technology sector. But, again, how much of this actually is anything of meaningful? Is actually meaningful as opposed to just bloated asset prices and creating this illusion that a tech sector is worth an awful lot more than it is. And we're back to this whole point that that GDP is just a completely idiotic metric to define economic growth. But the UK simply is not a place anymore anyone wants to invest in. Politically, it's looking like a laughing stock because of things that have gone on for far too long. And there's no basis that any country is going to want to invest in the UK. And the UK has this habit where it could develop relations with the global south to treat them like some sort of inferior country because the UK still suffers from the ridiculous notion that it's an empire. It's long since ceased to be an empire. For decades, it's been in decline, and there is no way to fix anything. And they're going to have to, swallow some very bitter pills in the future, work to try and turn the tide. But this is going to be a long haul issue that will take decades to fix. And the UK quite literally will become a third world economic country. In fact, it then has to find ways to become an emerging market again, and then eventually to become a developed economy. That's how serious a problem the UK is facing. And it's not unique either in the context of the West.
Yeah, and Western wine, I always love to find parallels, as they say, history rhyming. Well, 1907, of course, was the banking crisis in the US that led to the Federal Reserve. 2007 was the great financial crisis that led to QE and the complete financialization of the West. Also, if you go to the 1920s, it was absolute recession and almost depression in Europe. Are we starting to see that? Is it on our doorstep? Well, we will definitely keep an eye out for it. And Paul, were there any other final comments you wanted to make regarding this?
I think we trashed the UK enough for one.
Yeah, I tried to throw the U.S. and Europe under the bus too, but we'll get to them very shortly. To everybody here at the Sirius Report community, as always, thank you for your support. Don't forget to like, share, subscribe, comment, send this out to anybody you think it might be important to. And until the next time we get together, have a great day.